Hi, I'm Dan Wilton, CEO of First Mining Gold, and thanks for joining us for this presentation and introduction to the company. I'm going to be making a few forward-looking statements as we go through this presentation. First Mining Gold is advancing the Springpole project, which we're very excited about. Springpole is one of the largest undeveloped gold projects in North America, and one of very few that can produce, as scoped in our pre-feasibility study, in excess of 300,000 ounces a year in a tier one jurisdiction. We completed a pre-feasibility study on Springpole earlier this year and showed a very robust net present value of just shy of $1 billion US at $1,600 gold price. And the company is fully funded to take Springpole through the environmental assessment, feasibility, and permitting processes. On top of that, in addition to this very robust development project, we've got a meaningful land holding and growing land holding in the UCHIGREENSTONE belt, which is really one of the most underexplored high-grade gold terrains in Canada, starting to get a lot of attention over the last year or two as an analog to Red Lake. So we'll talk a little bit about that as we go through the presentation here. On top of that, we've really changed and restructured the company over the course of the last year and a half around finding partners for our assets. So we now have partners moving forward. Three of our really key projects, particularly we sold our Goldlund project to Treasury Metals, that now has the Goliath project, the Goliath Gold Complex, as they call it now, that they're developing, and put out a very robust PEA on that project earlier this year, moving forward with 60,000 meters of drilling. So that's advancing very well. And we are going to be distributing out about half of the Treasury Metals shares that we own and all of the warrants directly out to our shareholders later this year. In addition to that, we've got a great partnership with an Australian company called Auteco Minerals at our Pickle Crow project, which is past producing high-grade gold mine in northwestern Ontario. And Auteco is spending $10 million to earn into 80% of that project. They're through the first $5 million spend and should be through the second $5 million spend this year, which triggers some cash and share payments to us. And that is, they're having great success on their exploration program, again, in the middle of a 45,000 meter drill program. So great exposure for our shareholders to exploration success at Pickle Crow. They're finding new high grade right beside the existing infrastructure. And we just announced a partnership with a group called Big Ridge Gold that is going to take on and commit to spend $20 million on our Brook project in Newfoundland. Newfoundland is one of the hottest exploration areas in the world right now, and we've got a 1 million ounce resource, past producer, well understood, on tidewater, with a power line to site, unbelievable infrastructure, and Big Ridge is going to be moving that project forward. So we have this active partner-driven project portfolio that today has about $100 million, in excess of $100 million of value in First Mining. We think that the fundamental value of those projects is far in excess of that. And our partners are doing great work to surface that fundamental value. In addition to that, as we've moved these projects onto our partners, we've kept royalties on every one of them. And we now have a royalty portfolio that I think is probably the envy of a number of royalty companies out there. So we think it's a great source of future value and optionality. I think we're going to continue to look to grow that. And we've made some very important changes to our team and additions to our team over the course of the last 6 months, particularly bringing on Steve Lines as our VP Environment and Community Relations. And Steve and his team, who've joined us now, took the Hard Rock project in Ontario from scoping study all the way through to construction permits over the last 6.5 years. So we've got a great team with recent experience permitting large-scale projects in Ontario, all the same regulators through the same CIA 2012 process as Springpole is in. So we're making great progress on that and continue to move that forward. We'll talk about the time frame on that project going forward. In addition to that, you get all of this for exceptional value. I think we'll demonstrate that we're trading really at a significant discount to the value of our peers. So First Mining today has about a 250 million Canadian market cap, and of that, we've got cash and marketable securities and funding coming into us in excess of $50 million. So again, very well funded to get Springpole through this environmental assessment process. And on top of that, our strategic investments and partnerships. This isn't counting our royalty portfolio. Those have a value today of shares times share price or our project interests of about in excess of $100 million. I think the fundamental value of those projects is well in excess of that. Decent share trading liquidity. We trade on average not quite 2 million shares, almost 2 million shares a day in Canada, half that again in the US. And our shareholder base, great, stable, supportive group of retail shareholders who've been with the company really since it was set up in 2015 by Keith Neumeyer, the CEO and founder of First Majestic. So First Majestic is a shareholder. Keith's a big shareholder. I'm a big shareholder. You can see management and directors. Almost all of that, if not all of that stock has been bought, which is, I think, really important. And a small but growing institutional shareholder base that we're adding to here, coverage by 3 great analysts, and we thank them for all of their support. We'll talk a little bit about Springpole and then move on from there. So this sort of shows the location of the Springpole project here. It's sitting, about 100 kilometers east and a little bit north of Red Lake, Ontario. Obviously, Red Lake's a great mining camp, produced 20 million ounces plus over the last, not quite, but almost 100 years. And Springpole sits in this Birch-Uchi greenstone belt, which really stretches kind of from Pickle Lake, same arc of rocks comes all the way over to Red Lake. Really good exploration upside around the project. But Springpole, we put out our results of our pre-feasibility study. We'll talk about it in more detail, but actually declared reserves of 3.8 million ounces of gold and 20.5 million ounces of silver, which in the PFS scoped a project that demonstrates potential for annual average gold production 335,000 ounces a year in the core part of the mine life, making this one of the biggest development projects in Canada. Very positive economics, net present value after tax, just shy of $1 billion US using a $1,600 long-term gold price. And we all think the gold price is going higher than there. In this area of northwestern Ontario, obviously very familiar with mining, with the historical mining going on at Red Lake, at Pickle Crow, and great developments, recent developments at Rainy River, and obviously Goldlund and Goliath being moved forward. This whole region is starting to get a lot more focus as sort of an underappreciated gold terrain, but a great place to permit projects. Ontario has permitted 4 big open pit gold mines in the last 5 years. And we're going through the same process as those. So we're, great regulators, understand mining, and a great place to work. Again, I said this is a really strategic gold asset. We'll talk about that in a little bit. Fundamentally, why do we think that? It's because Springpole, when you look at its characteristics, is one of very few projects with more than 4 million ounces of resource, capable of producing over 300,000 ounces a year of gold at all-in sustaining costs in the lowest quartile, in a tier 1 jurisdiction, advanced to a PFS stage with district scale exploration upside that you could build for less than $1 billion. It just, all of these factors combine to really demonstrate that Springpole is one of the most strategic assets, we think, in the mining sector. And we're looking forward, as we move it forward through this permitting process, that value is going to start being recognized. Again, the project today, we're producing would, in any given year of its production profile, would be vying to be the 3rd largest gold mine in Canada. So really big enough for the largest gold miners in the world. And importantly, that production profile demonstrates something that's very important to understand about the project. Springpole is very different than all of these other large open pit mines in Canada, in that this is a continuously mineralized intrusive ore body. And what that means in its simplest is it's a big blob of mineralization. You're not having to hunt and peck for the gold inside a lot of ground. When you go to mine this ore body, it's 150 to 350 meters wide, and it's kilometer and a bit long and 500 meters deep, and you're pretty much going to take the whole thing. And there's lots of areas of higher grade in it, and that higher grade is important. And you can see the higher grade here. This is everything above 1 gram, comes right up to surface. And there's still some decent grade sitting underneath the pit, really only constrained by some geotechnical analysis that we need to do. But the higher grade gives us an opportunity in that production profile to put higher than reserve grade through the plant in the first 5 years. And what that means is you can see here 1.15 to 1.3 grams on a reserve that's around 1 gram. It means it accelerates your payback. It means that it is a project that's going to be able to attract robust financing because the payback in this project is less than 2.5 years, which is exceptional for a project of this size and scale. Now, with the PFS that we pulled together here, there's some of the metrics here, but after-tax NPV of just shy of $1 billion US, after-tax IRR just shy of 30%, all-in sustaining cost in the core years of the mine life, net of the silver credit, sub $600 an ounce. This is a very robust project, but initial capital, $718 million. I think very reasonable for a project of this size and scale. Would put this at the lower end of comparables in terms of what we need to build. And that's because we're going to benefit from a lot of the infrastructure that's in the area. We're on grid power, and ultimately the cost profile here is driven not so much by the grade, but by the ore body itself. It's big, it's pretty homogeneous, you can mine it efficiently, and that translates into low costs. So I think, you look at the after-tax payback period here of 2.4 years. This is a very robust project that's going to get built. And importantly, we've had some great advisors working with us on this pre-feasibility study, really quarterbacked by Auteco, who is building or has built a number of gold plants in Canada in the last few years. Very active. So I think if there's anyone who knows how to scope and cost these projects, it's them. AGP did a great job on coordinating the whole project and really focusing on the open pit mining, and delivered that mine schedule that I think you see shows a really robust and strategic project. The Bauer group came in to do engineering and cost the cofferdams and dewatering on the Springpole project, which gets to an important point of actually understanding the project itself. And some of the concerns, I think the reason why we trade at the discounts that we do, it's because the deposit sits under the shallow bay of a lake, and the development plan involves building a couple of small cofferdams. Those are on average 6 meters high and total a little bit less than 1 kilometer long. So these are not large structures. They've been well engineered by a specialist group that actually built all of the cofferdams at the Diavik mine in the Northwest Territories. So I think what's really important to understand about this now with the project is we've had a great team that's moving it forward. And our team has some real experience in understanding permitting projects that have this kind of cofferdam and dewatering. So Steve Lyons, who joined us in December as VP Environment and Community Relations. Prior to joining us, I spent the last 6.5 years taking the Hard Rock project from scoping study to construction permits. Prior to that, Steve was at De Beers and permitted the Gahcho-Kué mine. You can see here multiples of the disturbance involved building a few cofferdams and disturbance of lakes. And prior to Gahcho-Kué, Steve worked as a regulator, and as a regulator permitted the Meadowbank mine in the Northwest Territories. Or in Nunavut, excuse me. And Meadowbank, you can just see the footprint, significantly larger cofferdam, significantly larger disturbed habitat. So not only can this be done, but Steve likes to say he's done it twice. This is something we need to go through the process. We need to demonstrate the solid science behind this, but with the team that we have and the data that we've been collecting on this project for 10 years, it's an unbelievable data set that gives us the real confidence that the science says we can develop this project without long-term adverse impacts to the environment. So importantly, our permitting team now, between Steve's team that worked on Hard Rock and the team at Wood that is now really doing all of the permitting advisory work for us moving forward, they permitted almost every large open pit mine in Canada in the last 15 years. Detour, Goliath, Côté, Hard Rock, Magino, Rainy River, you name it, they've taken these projects through this process. So we have really the best team we can moving it forward, and we're well funded to do that now, which is important because we need to make real commitments to our communities and to our Indigenous communities, particularly around supporting them going through this process so they get comfortable and understand that we can collectively take these projects through this environmental assessment process. Overall timing, big year for us this year. We're aiming to compile and aiming to submit the environmental assessment document at the end of 2021, beginning of 22. And that in Ontario starts a pretty defined 18 to 24 month timeframe. And a number of projects, as I said, that our team has worked on have gone through the process in this kind of timing. On a parallel path, doing some optimization trade-off studies and some more technical work, including metallurgy. We think we can increase recoveries, including some potential to drop operating and capital costs on the project further. Some really interesting scoping studies, including particularly maximizing the use of our clean grid power in this part of Ontario and minimizing our usage of diesel on site. So lots of important trade-offs going. Leading up to really kicking off the feasibility study on the project as it's scoped going into the EA, and that feasibility should kick off early next year as well. And on top of that, we're starting to pay a lot more attention to what's going on in our neighborhood and starting to add to our land package in this Birch-Uchi-Greenstone belt. Again, similar geology to Red Lake. It's probably seen 1/100th of the exploration dollars that Red Lake has, and access is improving up in this part of Ontario. But there's a number of past producing high grade mines within 50 kilometers of Springpole. Really prospective. I think we're going to have 6 drill programs going on around Springpole, within, call it 50 kilometers of Springpole this year. So this belt's kind of found a bit of a renaissance. And just quickly wrap up to say on our partner-driven portfolio today, lots of catalysts coming out this year. And this is really important. This portfolio projects for us today have a value of in excess of $100 million. And we think that's a fraction of where it should be. First and foremost, Treasury Metals advancing the Goliath Gold Complex, taking it through a pre-feasibility study, 60,000 meters of drilling on the project this year. Auteco at Pickle Crow making great discoveries in the shadow of the infrastructure, including 3 shafts around Pickle Crow. Fantastic project. And we expect they're going to be through their $10 million earn-in, which will trigger some cash payments to us later this year. So again, a great job discovering high-grade gold, and we're just kicking off our partnership with Big Ridge, who's committed to spend $20 million on Hope Brook to earn into an 80% interest, and we'll be the largest shareholder of Big Ridge as well. We expect great things from them. And while that's all been done, again, this royalty portfolio we've accumulated is a very attractive royalty portfolio. Well, we'll be talking more about that in the weeks and months to come. And you get all this for one of the most attractive and lowest valuations amongst our peers. Advanced gold developers with pre-feasibility studies trading, $81 an ounce worth $13 an ounce. And I think we've demonstrated we've got the credibility, we've got the projects, and we've got the funding runway to really give investors confidence that we're going to close this gap. We're very excited to do it. So we think show here, what we would think is in excess of $1.7 billion of fundamental value in this company. Starting to do some exploration, but we don't need to find any more ounces to demonstrate that we have deep value in this opportunity. And we think that gap is going to close quickly as we continue to make progress on Springpole in the EA process. So I want to thank you very much for joining us. Lots of good news coming forward. Exploration at Springpole, exploration at our Cameron project, and exploration at three of our partner projects where our shareholders are going to have exposure, not just to the development of a very robust, strategic asset in Springpole, but ongoing growth opportunities from exposure to about 130,000 meters of drilling this year. So it's a very exciting story. If you need any more information, please come on our website, www.firstmininggold.com. Thanks very much and enjoy the conference.